Net income represents the money that is remaining after all of the operating expenses, interest, taxes, and preferred stock dividends have been deducted from the company's total revenue. The way that net income works is that it is basically the bottom line. It is determined by taking total revenue, total expenses, which equals the net income or bottom line. When you look at the net income, it is the bottom of the income statement. Net income is probably one of the most followed numbers in finance since it plays such a major role in companies' financial statement analysis and ratio analysis. Most of the shareholders will look at this area closely since it is the main compensation to them, which really means that if a company cannot create or generate profit, the prices of their shares will be lower. Another main thing to remember is that net income is not how much cash a company has earned during a specified time. Net loss is defined as being the result that occurs when expenses exceed the income or total revenue produced for a given period of time. For tax purposes, net losses in one period of time can be used to counteract the income gains generated in another time period. Under the tax law, this loss can be carried back as far as 2 years, which is also referred to as net operating loss or NOL. Net loss is when a person or a company with an actual net loss is given during the year. This tends to be more new business type that often run with a net loss since they are acquiring high expenses from starting their business up. Looking into Dell added $769 million in the determination of cash flows from operating activities for amortization and depreciation because of purchasing CIT Group, 30% interest in DFS, and $8 million expensed of IPR&D. Now, if we look at the cash flows from operating activities, which is defined as an accounting of funds related to the company's operation reported on the cash flow statement on the annual report, this is figured by adjusting the net income to reflect deferred taxes, depreciation expenses, accounts payables, receivables, and any other extraordinary items. This shows how much the company made from the actual business operations, which doesn't always include cash from other sources. In the article Cash Flows from Operating Activities in the Morning Star, cash flows from operating activities section comes first and tells you how much cash the company generated from its core business. As opposed to peripheral activities such as investing or borrowing, this is the area that should be focused on because it makes the whole picture of how well a firm's business operations are generating cash. After adjusting net income, all that is left is the net cash from operating activities. To look at the direct method for cash flow from operating activities involves the determination of various types of cash receipts and payments such as cash paid to suppliers, salaries, receipts from customers, etc. Then you add these together under cash flow from operating cash flow statement. To analyze the Dell data, in 2009, accounts receivable was $4,843 million. 2008 was $6,064 million. So the net sales would be $10,907,000. Expenses, or prepaid expenses, would be a total of $817, $447 million for 2009 and $370 million for 2008. Inventory for 2009 was $867 million, and for 2008 was $1,180. So the total would be $12,137,000. When there are changes in accounts payable, such as an increase, it shows that a company has purchased more items on credit. Since no cash flows have occurred for the purchase yet, the company retains the cash. If there is a decrease in accounts payable, it indicates that company has purchased fewer items in credit. So this in turn increases operating cash flows for the period being looked at. So if you look at Dell in general, you want to look at all of these things and then decide if it is right to invest in them. This is something very, very important to look at, and a lot of people will look at that when they are looking at companies to see if they want to invest in them or buy something from them purchase-wise. It's a very good, financial statements are very good to look at for this type of company.